most traders struggle to catch even 1 risk to reward ratio, but this week I caught a clean 10 risk to reward ratio move without stress. Not because I traded more, but because I followed a simple rule: 1 risk, small setup, and smart scaling. My name is Jeff Tagalios, and I'm the trader behind Team Jeff FX Academy. I teach traders how to grow small accounts with clear setup, strict risk management, and a very simple system that actually makes sense. And in this video, I want to break down the exact trade I took that delivered 10 risk to reward ratio step by step. So let's go straight to my trading view where I do mark the analysis. Now, on my trading view, the first thing I did, the trade I actually took was on GBP USD, and I started by checking my 4-hour time frame. As you can see on my chart here, I have my 4 hours time frame. Here. Beautiful. And that was how I was able to spot out this first touch of the trend line, second touch of the trend line. So I know that this is an obvious downtrend because it was forming a lower low. You can see lower highs and lower lows. So I was very confident that this is going to be a downtrend. So what I was now looking for was so I was just looking for a sell on GBP USD, and that was how I was able to mark this. I was kind of looking for a resistance. So as out of when I marked this trade, the trade was somewhere around here. It was going up. So my job now was to look for where it's going to align. That's a support, resistance rather, a resistance zone where I'm going to take it for a sell for that point. But I was actually looking for this area here. I was looking at this area here for it to get to this point, but it didn't get there. GBP USD just kept ranging around this area, and that was how I was able to decide that okay, I'm going to use this side as my resistance zone. Now, when I saw that side as my resistance zone, what I now did was to reduce my time frame. First, I check on the 1 hour. I actually got a resistance zone on the 1 hour time frame. Yeah, I got it on the 1 hour time frame. Beautiful. So I saw that the markets hit this resistance level multiple times before bouncing off. So I was like, okay, I'm going to look for a way around this point to take it for a sell. So then I reduce my time frame now to 15 minutes. This is just the process. Remember, I started from 4 hours, so I reduced my time frame now to 15 minutes, and it was around this point that I was now looking at the trade. It was around this point that I started looking at the trade. So on 15 minutes time frame, what I now look for is for a chart pattern. It's just a chart pattern, like a chart pattern that is going to be showing me lower highs. And then I was able to spot something here. If I change my chart here to line chart, you can spot something here. Aha, I believe you can see my chart here. I was able to spot something in this level here, and that was when I called the trade. As soon as the market went up here, I saw a confirmation candle for me. I saw a confirmation candle. The first confirmation candle I saw at this point, let me delete this circle so you can see. The first confirmation I saw around this area was a bearish candle, which was, you can see this bullish candle here, then this bearish one. So this combination is called a bearish engulfing bar. So this bearish engulfing bar formed at my resistance zone, and that was the first reason why I knew that okay, it's going to sell from this point. So what I just did was I looked for my measuring tools for a short, then my entry level. I waited for the market to kind of go back a little up. When it went up, then I was not expecting it to come down, so my stop loss was around this area here. So I just made it to up to 20 pips for stop loss. Then remember, on my 4 hours time frame, I've already know that if waiting for the candle. Right. Okay, so on my 4 hour time frame, I already know that anything that makes the market to resist from this resistance zone is going to come way down to this previous low here. So obviously that point will be where I'm targeting for my TP. That was what I was actually looking for. So after I've gotten my confirmation for entry, I just went straight down to that point and said, okay, I'm going to be looking at taking profit around this level. Of course, I might not necessarily wait for it, but I'm just looking at that level possibly to take my profit. So back to the 15-minute time frame. So after finding out that this will be my entry point, what I just did is I head on to my Telegram page. This is my Telegram, and that signal was dropped on Monday, I think, which was kind of on the 14th, if I'm not mistaken. Yeah, this was when I dropped the signal. As you can see, this was how the signal was looking as of when I dropped it. So the risk was 20 pips, and I told them to take a sell around this point. Now, when we took that sell around this area, let me bring out my line. Let me just delete this one. So when we took that sell, we took our first sell. Okay, we took our first sell around here. That was my first entry point. In fact, I even told them that I'm entering with just one leg. And then markets decided to, after forming this little confirmation for us, market decided to retrace back up again at this level. So what I did was, I now told them that, okay, anything that makes the market come down to this level again, then we are taking that place for a second entry. And it was triggered around this area. So we got a first entry around here, we got another entry around here. Beautiful. But one thing you need to take note was this: when we got the first entry around here, remember our stop loss was here, so that was what we were risking. Let's just say 20 pips. But as soon as the market went down to this level, went back up, and it's coming down now for our second entry around here, the stop loss that I had from this point, I reduced it to this point. So what it basically means is this: if I was risking, let's say like okay, I have a calculator beside me, so if you have your own calculator too, you can just check this with your calculator. I will not display the calculator on my screen here. So let's say I was risking, like for example, like on the account I posted on the group, I was risking $1K. Now you are risking $1,000, and your stop loss is 20 pips. If you do 1,000 divided by 20 pips divided by 10, that means the lot size you are going to use is 5 lot size. So it was 5 lot size I was actually risking around this point. So as soon as the market went on to come and trigger my second position, what I did was I reduced the original stop loss that was supposed to be here. I now reduced it to this point here. So when I reduced it to this point, I think the stop loss was reduced now. So let me check on the group, because I also told them what to do as soon as I reduced it. Alright, I told them, yes, this was what I told. I said if the trade continues in my direction, I will scale a new position at this point, and all my stop loss will be adjusted to that point. So that means my stop loss now will reduce. It's no longer that 20 pips that is supposed to be now. It will now reduce to maybe kind of, let's say like 6 pips or thereabout. Now if my stop loss reduced, that means what I was risking on that first trade now must have reduced. It will not be $1,000 again. It might have reduced by maybe half. Maybe I'm now risking 500. So what I will now do is, on this new position here, what I am going to be risking there, my stop loss will also be around here. What I will now be risking here will still be that 500. So since I'm risking 500 on this first entry, I'm risking 500 on this second entry. Even if the trade went back up and hit my stop loss, I am still going to be risking just $1,000. Now let me change the line color to red so that I can know which one is my stop loss. Beautiful. So that's how I got 2 entries. Then the market continued ranging. Then I observed that it went back up. It went back when it came down to this level. It went back up to this level again. Now as soon as it's coming down again, the next thing I did was to scale in another trade. Yes, I scaled in another trade around this level. Okay, let me zoom in my, yes. So I scaled in another trade around this level, respecting the fact that this is another new low. What I now did is my stop loss, okay, all the blacks line are my entry point, while the red was my stop loss. Now my stop loss that was here initially, I now reduced it. I reduced this. I reduced it rather to this point. So what the idea is this: when this trade comes down to this level, this one was the present high. I did not shift my stop loss to this one. Even if I had shifted to that point, I would still be in the trade, but I didn't shift to that point. I used the previous one, which was this one. So meaning this particular one here now is secured. This one, the 500 I was risking, has now been reduced. Maybe it is just 200 now, so I still have about 800 or so, or maybe what I'm risking now total is about 450. So I still have about 550 to risk again. So it is that 550 now that I am going to risk on these third positions. Then I allow it run. Then before you know it, the trade kept tanking. Then it got to a point that the trade went very down to somewhere around here, and that was when we were now expecting the NFP trade. So instead of my stop loss to still be this far, I kept reducing the stop loss till a point where I told uh my community traders to just put their stop loss around this level. So look at where we are coming from. We took the first entry around here, took the second entry around here, took the third entry, and you've seen how I was following the zone gradually until we got to this point. So we're expecting NFP to actually push the trade down. This was our TP, this was our final TP, but it didn't. It went down a little, then started going up. So we took out our profit. Like now we are all out. Anybody that is out, maybe the person is waiting for you to come to this way before coming down. But of course, it will not be necessary for you to now wait for your pips to come reduce to this point before you now start going down again. No. So what I just did is we are all out on the trade presently. So the trade was not as easy as I'm just saying it in this video actually, because if you look at it, it was kind of ranging. It went down, going up, come down, went up, just like that, just like that. But we were very certain that our setup is still accurate. The risk management I used here was superb. I didn't risk more than what I can afford to lose, because if your risk is low and you've planned your entries well, it will be easier for you to trade without emotion. And that was exactly what I did. So the next thing I was just doing for them now was just to keep, following them up on each trade. I told them, small accounts, your edge is patience, not speed. And that was how I kept telling them, and that was what I kept telling them, just to be patient. I kept them to be patient, just like that. On this particular account, this one went about, this person made about, I think, 10%, right? 10% on that account when the person closed, because the person just wait for about, the person was risking, initially the person was risking about $40. So this is about, if I'm not mistaken, this is about four, that's times 3 of what the person was risking, and the person scaled in only twice, and that was it. Before the trade started tanking down more and more. So the idea was that I'm not looking for a way to trade every single day. No, I was patient enough to wait for a very good trade, and it was able to give me 10 times what I was risking. As of when I made this screenshot, it was just 7 times, but at the final stage, which was this, I was able to secure 10 times. And that's exactly how trading works. It's not about trading all the time. You have to trade less, analyze more, only scaling into confirmed winners. If you observe, when I was taking this trade, I didn't just scale in because the market was I want to make more money in the market. No. And I didn't break even early because I was trying to secure my capital. No, that was not what I did. What I did was I scaled in only when the market gives me opportunity to scale in. I scale in only when I'm sure that, okay, the first entry I entered is now secured. The first entry I entered, the market is telling me that yes, I didn't make a mistake. That was when I kept scaling in on the winning trade. Then if you observe, I'm not using multiple strategy too. I just stick to one particular strategy, and that was what is working for me, and that's how I keep making money in the forex market. So I trade with structure. Some people don't trade without some people don't trade with structure. They just market is like, somebody kept messaging me the other time. I was like, gold is going to go up, gold is going to buy, gold is going to, you don't have a defined structure, a way of making your entries sustainable. For example, the gold might give you 500 pips, but what is your risk? If you are risking, let's say, 200 pips to make 500 pips, that's barely 3 risk to reward ratio. No, it's not ideal. But in this one, remember the original risk was even 20 pips, and the entire movement now is about 100 and something pips. Let me measure it. If I measure the entire movement from this first entry here to where the market eventually get to, that's about 140 pips. So that alone is about times 7. That's about 7 risk to reward ratio. But because I scaled in, that was why I was able to make extra 10 extra 3, which was 10 risk to reward ratio. So this is exactly how I took the trade. Now the reason why I was actually waiting for my forex factory to let me know if I'm going to make something tangible from the NFP was because the the forecast for the non-farm employment change was 53k. Why the previous, okay, they've even dropped it, because the previous before was not this 4k. I think it was 40k. Yeah, it was 40k. So I was and this one was just break even, 0.3%, 0.3%. This one 4.3%, 4.3%. So only this one was indicating that the US dollar is going to gain strength, which it actually did. But the accompanying news by that time made it fluctuate, and that was why we didn't experience that deep down on GBP USD. So for the viewers in my YouTube channel here now, the lesson that you can learn from this video is the fact that I trade less, I analyze more, I only scaled into confirmed winners. I have one particular strategy that I am sticking with, and I don't trade without structure. Then I stick to my risks. Yes, if you can take note of all these things, it will be easier for you to make money in the forex market. It's not just about taking trades every day. No, it's not just about that. Then if you want to trade with me, if you want to follow my exact analysis, just like this group I was sharing earlier, I already have few members in there. If you want to join my signal group, that's you just want to get exactly the signals I use in trading, all the signals that I am trading, you want to trade exactly the same way. What you need to do, the first thing you need to do is to trade with the broker that I am trading with, and I'm going to drop the link to register with them in the description box of this video. So after you register with that link, you can also contact me with my contacts in the description box as well via WhatsApp, where I'm going to add you to the group. You are paying absolutely nothing. All you need to do is register with that link, then chat me up on WhatsApp. Then as soon as you've done that, I'll just add you up to the group free of charge. In fact, for the whole of this December, what I'm going to be doing is I'm going to be sharing my signal for absolutely free. So that's just how to join my group. Now for this, still on this analysis I took, some people might feel like, why didn't I close early? Why didn't I take my profit early? Because actually there was a point where the market gave me, I think around this point it was giving me about 5x, and it reduced to this point. There are points where it gave me massive profit and it reduced. I didn't close early because my setup was still intact, so I didn't allow my emotion to dictate my exit. No, my profit target was based on structure, not on feeling, and that was how I was able to wait till that point. So you don't need to trade 20 times in a week to be profitable. You just need one clean setup, small risks, and the discipline to let it play out. And this is how you grow your account, and this is exactly what I teach in my academy as well. So if you found value in this breakdown, imagine what you are going to learn inside my circle, where I share real setup before they even play out, explain the psychology behind every entry, and I guide you through the exact process that keeps me consistently profitable. So if you are ready to stop guessing in the market and you want to start trading with clarity, confidence, and a proven system, the link to register is in my description box. Please like this video, comment, and share to others who you feel that they might benefit something tangible from the video as well. See you in the next video.